You've seen us track the Fed H.8 reports. What I look for here is impulse. It's more rate of change and direction as far as where the U.S. banking system is deploying capital. So we've got the asset side and the liability side. We'll start with the assets here. This is the latest weekly report we have, which goes through January 21. So comparing week over week now on the most recent data available, we'll get a new one tomorrow, but we're seeing that uptick in bank lending to commercial and industrial borrowers. So that impulse, first one I highlighted, yeah, up 3.2 annual impulse. This is nothing to brag about, but it's the start. If you see the rate of change, just the movement from basically zero, and as you just drag, you shorten your measurement window you're taking that first derivative on, you can see it's moving up and positive, right? So as this trend with the underlying policy continues to work through, you're watching for that kind of segment, that line on the H.8 report to reflect that capital allocation going into U.S. industry, which is bullish in my opinion on the U.S. So we talked about the slowdown in bank credit expansion. Well, it's now also in an uptick, 4.7% annualized rate of change on the smallest increment. You can take that derivative in the H.8 reports. So that continues to move up and to the right. And then you've also, highlight, across the different line items, you call out it's being led by commercial industrial lending. So if you just think through this, what's going to happen? Well, if you're flowing more of your banking capital into U.S. industry, that's manufacturing production, that's output, that is positive for the U.S. economy. So it's a positive story in my opinion. This isn't, despite what you're seeing in financial markets on the underlying fundamentals, this is from a U.S. perspective, from an American perspective, a positive development. It's playing through exactly as you'd like to see it. On the cash reserves and collateral assets, something to note, you've seen a decline in the cash reserve position with banks. This is where the Fed gets into, what it's watching for its just kind of reserve management policy. So you're getting into, these are the aspects I won't touch on them too deeply here, but the Fed wants to make sure that the U.S. commercial banking system has enough reserves to settle all the transactions, interbank transactions between each other. So this is where it needs to watch that cash reserves position extremely closely at this point we find ourselves in from the financial cycle standpoint. Now on the funding side, one thing to note, we do have a drawdown in deposits. This is typical. We'll go through the chart here. This is something you tend to see on an annual basis. Just you open January, deposits tend to shrink as households, businesses, et cetera, they get through Q4, which is your big spending quarter for the holidays. You settle out all your, end of year contractual obligations, all of that. You generally tend to start the year off at a low point in deposits. That's something we are seeing. But as you get through tax season, that situate like April 15th in the US, the main filing date for individuals as well as businesses, you tend to see that deposit situation start to work itself out. So those are like on the funding side, that is something you want to continue to watch. Right now, banks, the banking system, the commercial banks have leaned into borrowings. It's pretty clear. This is like tapping the debt markets for accessing capital to fund that loan growth into what's largely going into the U.S. commercial and industrial borrower base within the U.S. economy. But at this point, like the balance sheet expansion, it hasn't gotten out of hand yet. So this is still very early in this process playing out. Cameron, any other comments there?
I think that
With
that was a really good explanation for me to just kind of see this whenever Matt, just for the viewers as well, whenever Matt puts up this H.8 report, I'm always kind of like, whoa, what am I looking at? All the colors, all of that. But that was very clear. You can see, you can follow those numbers all the way through and understand how that actually operates.
Yep. So your first signal, your bank reports, your H.8, it's always 2 or 3 weeks delayed. Your ISM, you only know where you are like in the current month weeks and weeks later, once you get that print after a month. Your earliest signal is always going to be equity markets. So follow those closely. If you had listened to what we were saying, 3, 4 weeks ago about that Dow theory breakout, this is really leaning into that. And I think as you get into the cross asset kind of volatility we're going through now, we'll talk about that in a bit. The sectors that actually have a structural tailwind in this environment, U.S. industrials may be one example, U.S. small caps, which tend to be more domestic players as opposed to like an S&P 500 large cap, which is going to be more global based in terms of its business footprint. Those sectors in this pullback have been an outperform. So, the tide washes out with liquidity in the setup we'll talk about in a second. But if you have that tailwind at your back, well, you should outperform in that environment. But yeah, just to quickly summarize the charts, demand deposits, I highlighted in yellow here. The next slide. The red is the beginning of the year. We do have a downtick in deposits. That's, hey, you make a bank deposit, the bank turns that around and makes a loan. We do have a little contraction on the deposit front, but I wouldn't worry about that too much right now. As I've highlighted in yellow, you see that same pattern at every turnover from end of year to beginning of the new year. So keep watching. If that doesn't turn around, then we'll have to address it. But as of now, just totally normal behavior. Next slide I want to go to is the commercial and industrial loans. We're still in a little like a flat range that we've been in since the start of 2025. This hasn't even gotten overheated yet. So from like um, just like a market cycle standpoint, if you're early on, in the process, like what inning are we in? First, second inning of this thing playing out. We're not even at the high of where we were on commercial industrial lending in the US banking system relative to kind of the plateau from all of 2023 and 2024, let alone the big surge of March 2020, when we just threw everything at the water with CARES Act, SBA loans, all of that. So this is nowhere near overheated, in my opinion. This trend that we're talking about, the US reindustrialization, that, just from the data, the metrics, the anecdotes, and the equity market signals, looks to me like it's working. This process is very early on. And if I had to call it right now, I'd say this is a durable trend. You probably as an investor lean into this. Right now, the main thing that looks like it could push it off the rails would be some abrupt change in who controls the keys in Washington, D.C., starting with the midterms this November. So it's a wait and see, but continue to watch for strength there. And then finally, the bank borrowing. Banks are also nowhere near their highs as far as just tapping bond markets. You've seen an uptick, but that's every quarter once the large banks, and you could say the regionals as well, who do issue fixed income securities, bonds in the public markets, they have to finish their earnings call, wrap up that process to get out of the blackout window. Then they go tap the debt markets. That's done as we've turned the corner from Q4 of 2025. They've begun tapping, fixed income markets. That's what that funding is providing. But once again, nowhere near the all-time high of where they were in by Q2 of 2023. So things are fine within the U.S. commercial banking system. I'd say the key thing to watch is that cash reserves. This is where the Fed wants to manage and make sure there's ample reserves, if you will, for banks to settle those transactions that are needed in a U.S. economy that is continuing to register kind of above trend growth.